Hi guys, today in Principles of Accounts we're going to look at adjustments to final accounts and specifically bad debts. My name is Katevi, but you can easily call me K. So first of all, we'd like to define a bad debt, and we are told that a bad debt is a debt that cannot be collected. In short, this is money that is uncollectible, and reasons for bad debts are as follows: running out, when a person or a data runs away without trace. It is very difficult for us to keep record that we are going to receive money when we do not know where our data or our datas are. So in this case, we have to write that money off bad as a bad debt. And the second reason is bankruptcy. When someone or our data does not have enough money to pay us back, he or she may be declared by the court. He or she may be declared bankrupt by the court, and this will lead us to writing off that debt. And the third reason is that we may write off money as a bad debt when the debtor dies, because there is no way we can go and start asking for our money back when the debtor has died. And the fourth reason, the last one here, is that when a debtor refuses the debt, in cases where you don't have any evidence or you didn't sign anywhere that the person had borrowed some money from you, it is very difficult for you to collect that debt once the debtor refuses. Accounting entries for bad debts: 1. The uncollectible debts must be removed from books of accounts by debiting the bad debts account and crediting the debtors account. The second thing that we're supposed to do is that at the end, transfer bad debts to profit and loss account by 1. Debiting profit and loss account, and 2. Crediting the bad debts account. So an example that we have is on 1st May 2019, we discovered that Michael Jones owed us $300,000 and disappeared without trace. The balance is to be written off as a bad debt. Show the journal entries for clearing the debt with narrations. Show the ledger accounts and transfer to the income statement or the profit and loss account extract. So here we're being told to show the journal entries, and what you should know for the journal or the journal proper is that you do not include the name of the business. So this is how the journal proper or journal is going to look. It is going to have 3 columns, which is the date, details, folio, debit, and credit. Okay, so we're going to have the year 2019 and US dollars thousands. We are trying to reduce the zeros. We're debasing the zeros so that it can be easier for us to record. So we start with the date on which we realized that in which we discovered that Michael Jones owed us this money, which is 1st May 2019. So we say 1st May, bad debts, 300,000 US dollars. Yeah, because we have the thousands there on top, the 3 zeros, which is making it 1,000. We are debiting the bad debt because bad debts are expenses, and all expenses go to the debit side. So under bad debts, we have to write who our data is, and we are told that our data is Michael Jones. And Michael Jones, we're using the same amount. We are going to credit so that we can complete the double entry system between these two. And we were told in the question that we are supposed to show the journal entries for clearing the bad debt with narrations. So the statements highlighted in pink or written in pink are the narrations that we are talking about. So after writing the bad debts, we say being a bad debt written off, we have written this, we have written off this bad debt because we have balanced these two. And on the last date of the accounting period, which is usually 31st December or December 31st, we say profit and loss account, which we are going to debit, and the bad debts account, of which we are going to credit. We are going to debit the bad debts or the profit and loss account because this bad debt is an expense, and an expense is recorded under the debit side. So we were told to show the ledger accounts. So the ledger accounts, we are going to have two accounts. We're going to have the bad debts account and Michael Jones account. So we're going to start with Michael Jones account because this is the account to be debited. So for Michael Jones, we use the same format, and we say May 1 balance brought forward, which is the bad debt. We say 300,000, or just simply 300 US dollars because we have the best there. And on the same date, we say bad date, which will go to the credit side for us to complete the double entry system. The highlighted numbers there, or the highlighted rectangles, those two are simply representing the total. So we are done with Michael Jones account. So the next account is the bad debts account, where we are going to have Michael Jones, our data appearing, and as we have seen, Michael Jones is appearing under the debit side. So meaning Michael Jones is our data, and datas appear on the debit side. December 31st, the profit and loss account, we are going to put it at 300 kwacha under the credits, 300 US dollars under the credit side, which will complete the double entry system. And allow me to say that whenever we are recording such the accounts in the journal proper and these individual accounts and the data's accounts, we should always start with the debit entry. The entry that is supposed to be on the debit side is the entry that we are supposed to start with. As you have seen, here we have the bad debts, we have the profit and loss account, we have the balance, and we have Michael Jones. So we were also told that we have to transfer to the income statement, which is also known as the profit and loss account extract. So income statement, which is our title, income statement extract for the year ending 31st December 2019. Bad debts written off, we pay money to recover that debt or to close the chapter of that debt. So meaning that is an expense on us. So we say less expense, under the less expenses, we say bad debts written off, which is the 300,000 US dollars. So if you're not clear, you can subscribe, and I'll continue trying to educate you, we'll educate one another so that we can understand better. So just to test yourself if you have understood, there's a simple task here which says on 31st December 2018, we discovered that Joseph Williams orders 950,500 US dollars and has disappeared without trace. The balance is to be written off as a bad debt. Show the journal entries for clearing the debt with narrations. Show the ledger accounts and transfer to the income statement or the profit and loss account extract. Thank you. Don't forget to subscribe.